If you're a brand new investor or a seasoned pro, how do you build a 150 plus property portfolio while keeping a full-time job? Today, we're talking to Matt, the Lumberjack Landlord, and he's going to show you exactly how it's done. So Matt, ready to go?
Let's do it.
Hi guys, today we have Matt from the Lumberjack Landlord podcast. So Matt, welcome.
I'm super excited to be here.
Yeah,
Great
no, definitely, man. Welcome from New Hampshire, right?
Excited.
So I guess let's kind of jump right into it. You do a podcast today.
I do.
And it's the Lumberjack Landlord podcast.
It is.
So, well, how did you come about becoming a landlord?
Oh, well, it was the whole family. So my uncle was in real estate. My mom was in real estate. But what was really funny was I wanted to make my own way. So I got into tech. And then I was invested in the dot-com bomb. Okay. So when everything blew up in 2000 and 2001, I lost all the money that I'd saved. And I said, I need to find something where an internet whisper can't cost me my fortune.
Got it.
And so that's where I started looking at what alternatives were, and real estate ended up being a pretty good option. And so that's what then the goal became, which was I was living in an expensive area, couldn't afford to live there, and said, how do I live there? And so that's really where, before it was called house hacking, that's how I started house hacking, and that was the start of the journey.
Okay. So basically, this is in New Hampshire.
It is.
Right? Mm-hmm. Like a lot of the people around the country, they've heard New Hampshire. Mm-hmm. They have no clue even where it is.
That's true.
Right?
Many,
I mean, it's just kind of what it is. Unless they really look on the map and unless you really, kind of zoom in, you're going to miss New Hampshire. So everybody knows where New York is.
Yep.
North of that is Boston. Everybody's heard of Boston.
Yes.
Right? And then just couple hours from there,
yes,
right? It's New Hampshire, and it's the state of New Hampshire. We say that because it's a very, very small state,
very small,
right, relative to most other places in the U.S. Yep. And it's kind of an interesting place, right? You guys have no state tax,
nope,
right? No income tax,
nope.
But you guys have high property taxes.
We do,
right? So the tech thing goes bust, right? For people, depending on your age, you may remember it, may not, and then. What was your kind of foray into it? Was it like, okay, let me buy a house for me to live in. It's expensive, so I'm going to do a house hack. What's that? I mean, it was not called house hack. It's just like almost like co-living. I'm going to get a roommate type of thing, right?
Exactly.
I mean, probably that's what it was, correct?
That's exactly right. Yeah, house hack, the term didn't exist yet.
Right.
So it was basically, I needed a place to live.
Sure.
And so I looked at my most expensive living expense was, in fact, living expense of a place to live.
Housing.
Yeah. So that was the biggest challenge. And so the other big thing for us was I was driving a ton to work. It was a lot of mileage. So it was gas and it was everything else. And it was, all the expense that it comes to managing and having a car. I was in my early 20s.
Sure.
So I'd had a good job. I'm a ninth grade dropout. And so I'd gotten used to working a lot at ninth grade because not too many people take you seriously when you're a ninth grade dropout. But found a great job, worked my way up through in the tech side of the company, and then had the opportunity to say, hey, I've got some money saved now. I want to buy a place.
So hold on. There's a story there. Most people, right, at least make it through high school.
Yeah.
Right. I made it through high school.
Yep.
First year of college, I dropped out.
You show
right?
off.
No, I did. I mean, so I went a long way after you. But I mean, there had to be some cause that was kind of the impetus to dropping out in ninth grade.
Sure. Yeah. I mean, it was, I felt like so going to school was a drudgery. It was horrible for me. I hated it. Absolutely hated going to school. I was smart enough. I knew the things I needed to do to get by. So I really wasn't focused on a lot of the things that, they would say, hey, you're going to need calculus. I'm not going to need calculus. Not with what I want to do with my life. I'm not going to need calculus. I'm going to have really smart guys that know calculus inside and out work for me someday. Okay. I don't need calculus. So, and it was, for me, it was just, I went to my mom because I was raised by a single mom. Went to my mom and I just said, hey, listen, we got to figure something out because I love working. I started working when I was about 11 doing lawns. Then I did paper routes. And then I got to 14 and I was working in a retail environment.
So this is important. And this is why I asked the question.
Sure.
So you didn't drop out of high school because you were a derelict.
No.
right?
No.
I mean, so you were not an idiot. You're not a
No.
moron where
I mean,
you're like
depends who
doing
you ask.
no. But what I mean is that doing some stupid shit,
Yeah.
and getting into trouble, and then that, and not that again. There's an age, there's a time in everybody's like people maybe do some stupid things. So
Sure.
don't. But there is a like. The reason I ask that question is this: that sometimes I hear this narrative today a lot that, oh my God, you want to be a millionaire, drop out of high school, right? No. And I think it's a stupid advice,
Yeah,
right?
I agree.
That you're going to make your life difficult. That does not mean your education does not dictate who you're going to be for the rest of your life.
Absolutely.
Right? Because education starts right when you graduate or you don't graduate.
Sure.
Right? Because educating yourself never stops.
Absolutely.
Right? And a lot of times I think we take that for people misunderstand that. Like a lot of kids nowadays, like, oh, I'm going to be the next Instagram superstar, right? You're not. I mean, just as you're not going to be a pro athlete, you're not. And it's not a knock, right? Just understand statistical odds are against you. And if you're that enticing, if you have that X factor that you can stand out, God bless you. But 99%, you're not going to be.
I'm just not that special.
Yeah, and I mean, most of us are not, right? And you have to, and there's nothing wrong admitting that, hey, most of us are not special, but yet you can do very well financially in life. These are two different things.
Absolutely.
Right?
Very much so.
So I guess as we begin, I want to pick that up from there, because just because somebody doesn't finish high school or barely finishes high school or doesn't finish college, what do you think separates people? And success, again, is defined by everybody's definition is different. But why do you think some people will earn more than most or end up with net worth more than most? What is that separating factor according to you?
Wow, I mean, big question, right? Like, what is the meaning of life? We'll cover that one next.
Sure.
I think what you're asking and what I truly believe about it is you might have been smarter than me. You might be more educated than me, but you will never outwork me.
That's it, period.
You're never going to outwork me.
Okay.
And so it becomes understanding, and then it becomes, okay, I have this work ethic, but now it needs to become focused. And then once it becomes focused, then it becomes turbocharged. And so that's what I think entrepreneurs do really well, is they recognize that they take the things that they need from the situation, understanding education-wise what they needed to generally know. But there are things that, I'll never be good. I'll never be a good HR director. I could never do the job. That's something that absolutely has to be outsourced.
Sure.
However, the rest of the business, when it comes to, I can teach people to do different parts of the business. What I can't teach people to do is create unbelievable financial opportunities and structures and deals for the ones that I want to do that fit my profile.
Yeah.
And so I think that's what separates is it's not the most educated, it's not the smartest, it's the hardest working, willing to admit that they don't know everything and that they have to obtain the knowledge from somebody that's done it before. That's why your masterminds are packed. That's why your master classes are packed. It's because they know you've got the goods.
Right.
And so it's the same thing for me. It was, this is where my focus was. And now it's anything that you do after a certain amount of time. There's that book, 10,000 hours.
Sure.
What happens when you get to 40,000 hours?
Sure.
You become elite.
Right.
And that's my goal in the things that I do is I become elite. And then I surround myself with people that are elite at the things that filter into the business.
And I mean, that's kind of, I think, well said, because it's really, you can't control how smart you are.
No.
Right? No. I mean, you can't really control, your looks. You can't control where you were born. You can't, there's a lot of it that's out of control.
Absolutely.
Right? But yet what you can control is the choices you make. And one of that is a good work ethic.
Yep.
Right? The other one is that do you continue to grow?
Yes.
Right? And how single-minded focused you are.
Yes.
Right? A lot of times, if people have that factor where they will pick something, they have the stick-to-itiveness and the fortitude to break through.
Absolutely.
Right? Because if you're not frustrated, to me, you're not growing.
I totally agree.
Right? It's 100%. So you kind of are working in this tech sector.
Yep.
Right? So I imagine you were exposed to a lot of the stock market, investing, all the buzz around it, and you, I'm sure, partook in it.
I did.
Right?
I did.
I mean, and which makes sense.
I did.
Which only makes sense, right? That if you didn't, you'd be like, oh my God, he's a fool, right? But
Exactly.
And things were good until one day they were not.
Correct.
Right? And nobody could control it. That was just kind of where the market was, right? Kind of something is going on with cryptocurrency. We'll see if it lasts or not. We don't know, but we'll see, right? If it does, you're a genius. If it doesn't, oh my God, you're a dumbass, right? But so was that kind of an awakening moment that I need to do something brick and mortar?
It was the awakening moment that I had no control in that situation.
Got it.
I had less than no control in the situation. And it wasn't a matter of, with a house, a good year, something goes up 10, 15%. A good stock, you can have something go from $10 to $200 back to zero in a year.
True.
In 3 months.
True.
These are the types of things. And so for me, not living in Manhattan, being part of the inside crew, not being one of the top 5 banks in the world, they have an advantage.
Right.
And I want to play blackjack in life where I can actually tilt the advantage in my direction. And I feel like the stock market for many people it puts them in a position where they are at the whim of the market.
Got it.
And what happens if you need to retire and your portfolio is down 80% or 70%, but now you need to be living on that because your plan was to retire in a year. Right. Well, now you're working 2 or 3 more years.
Right.
The nice thing about real estate is, except for a short blip in history since they've started tracking rent results I think it was the 30s or 40s since they started tracking rent results, there's never been a 5-year period where rents have gone down.
Correct.
And so I will take those types of odds, recognizing that rents might blip down when the great financial crisis happens in certain areas. In a lot of areas, rents went up because people that were losing their houses still needed a place to rent, and then there was a bunch more demand.
But the interesting part is this. If the rents go down,
yes,
right, the amount of opportunities to buy explode.
Oh, explode,
right?
Yes.
They explode tenfold.
Absolutely
They explode
correct.
and the only reason rents go down is because the demand has gone down.
Absolutely.
That means housing demand is down, so it's not like the population of the country goes down. It's just that more people are consolidating.
Absolutely.
Right? With their parents, with their spouses, with their partners, brother,
right.
sister, whatever the case may be.
Yep.
And that means we have economic crisis, which means you can buy real estate pennies on the dollar.
That's right.
So you make up what you give up here, $100 or $200, you make up hundreds and thousands in terms of how cheap you could buy housing for.
Absolutely.
Right? So you jump in, and your first property, you said what today we would call it a house hack.
Yep.
Right? Which is, hey, dude, I'm buying a house, I'm going to get a roommate, and then that way I can basically collect $500 from him and basically offset my rent. I mean, very simple sort of a strategy. What led to actual investing?
So what led to actual investing was the fact that I saw how little I had to pay to live on a monthly basis.
Okay.
He was paying the same amount of money that I was paying, but I owned the place.
Right.
And so I just said, that's interesting. But the challenge for me was, on the investing side, I loved my career. I loved working in tech, worked in tech for 26 years, just retired last year. But in working in tech, that was my priority, working 100 hours a week and doing that work. And so it was, how can I do something else that just by sheer existence increases in value and pays off my mortgage?
Sure.
So that's what became the idea of really investing, was the next house saying, I can do the same thing. Now, the issue that I had was I had sold the first place. That's what I shouldn't have done that. Shouldn't have sold it. The idea is better served when you buy it, you fix it up, and you live in it while you're doing that. And then in a year and a half, then you move on to your next place. Now, if rates are the same or lower, you cash out refi. If they're not, then you've saved up enough money by house hacking to be able to afford your down payment on the next property.
Right.
So the beginning of my journey was, quite frankly, not awesome. It was, we did 9 buildings in 13 years. Right. We house hacked 9 in 13 years. And then we had enough money to really start investing.
So that's number one, right? Which is, to me, that's patience.
Yes.
That's not taking extra money and buying a fancy car, doing something where you're living well below your means, right? You're doing a good old American way, right? Which is, or it doesn't really matter where it is. Anybody who has built anything over a period of time, there has to be some sort of discipline. Right. Whether it's forced, whether it's whatever it is, right? There was some discipline for a period of time.
Yeah.
Right. And I hate the word discipline because I don't like discipline. But a trick that I've found is every extra penny I have, I just go buy more properties.
Yeah.
Right. I buy them with deep discounts.
Yep.
Huge, and I just spend the money there, so you feel broke.
Yes.
Even though you're getting wealthier and wealthier and wealthier, but because I know if I have extra money, I will find a way to do something stupid. And I'm not saying it's not like even when I didn't have much money, but if I felt like, oh my God, I got a $3,000 commission check at the time, right? I was excited, man.
Yeah.
To go cash it, and I already had planned.
Yeah.
How I was going to spend it all.
Sure.
Right? Because I felt that, I needed this. I waited for this. And even before it was in the bank, it was spent.
Yeah.
Right? And yet you're using that simple thing that you're over a 9-year period, you said, or 13-year period.
No, over 13 years, nine
properties,
yeah.
right? So you're buying every year and a half something, you're buying something,
sir.
right? And you accumulate this little portfolio. Now, at the time, today, DSCR loan, everybody knows about it.
Right.
Right?
Right.
Did that exist?
No.
Right?
No.
So
couldn't get them.
for the audience that's watching this, right? Today, you can get a loan to buy a rental property easier.
Oh, much easier.
Right? Than
Yes.
you can to qualify for your first home purchase.
Yes.
Right? And some people get all pissed. They're like, oh, yeah, the rich investors, blah, blah. I'm like, you have the same opportunity, actually.
Yeah.
Right? That you can get into a DSCR loan. All you have to have is a credit score 660, 670 and up. That's
right.
it.
That's
right?
it.
You have 3 months worth of payments. You can get a rental property loan.
Absolutely.
And we have a lot of people that rent themselves, but they own 8, 9, 10 other rental properties, right? Because they're like, man, it's easier to accumulate, and one day I can go buy whatever house I want.
Absolutely.
Right? So at the time, you're kind of forced to do 20% downs, 15, 20% downs to buy these properties, correct?
Yep, sure.
Right? Because after 1 or 2, you're not going to get a FHA type of loan again.
Yeah, so at the time, so it was interesting back in '07, the number was 10. They stopped you at 10.
Got it.
During the crash, I got up to 5.
Okay.
During the crash, they actually went down to 4.
4, yeah.
When they went down to 4, I said, great, I'm out of business.
Yeah.
I can't do another one. That was the reason the house hack worked, is because it didn't qualify.
Right.
So I was able to still buy, but I had to move into it. I had to do the work. And so, yeah, the market throws you curveballs, and I was willing to, I didn't live in a single family home until I was 40.
Okay.
I lived in duplexes, triplexes, and quads.
Right. And you were okay with it.
Sure.
Right.
Sure.
I mean, the reason I asked that question is a rhetorical question,
Yeah.
right? Because a lot of times people are like, "What, Andrew, you don't understand. I have a wife." I'm like, well, so, right? Hundreds of thousands of people, millions of people live in Chicago in a 2-unit building.
Yeah.
Isn't that where you were living, 3-unit building?
Yeah.
Right? And if you're not going to do that when you're 20, 25, 30, 35 years old, in your earlier part of life,
Yes.
right, then you're certainly not going to do it when you're 50 or 60.
No.
Or when you're 60, you're going to be forced to do it.
That's right.
Because you don't have the money
That's right.
to afford your own damn house.
That's right.
Right?
That's exactly right.
Because would you agree with the statement that life is going to exact a payment from you?
Yes.
Right? Whether it's now or whether it's forever.
Absolutely.
Right?
Totally agree.
Pay now.
Yeah.
Right?
Pay now or pay later. You get to choose.
Yeah, you get to choose.
Which one would you like? And so
Right.
for us, it was, I was making 6 figures.
Sure.
I was able to put my wife through college.
Right.
She became a nurse. And so I was able to put her through college because our part of the mortgage was $300 to $500. I was making $10,000 a month.
Sure.
I could afford to do that.
Sure.
And so the unique opportunity is, couples that say, well, I don't have a big income like that. Right. But you have a greater income if just you and your wife both make 50 or 60K a year. Right. I had a wife that wasn't working that I was putting through college.
Right.
Because she decided, she's like, I don't like my career path. I want to go back.
And both the people have to be on the same page.
Yes,
right?
of course.
Which is that meaning that if you have to cut out certain expenses.
Yes.
And say, hey, I cannot afford this year.
Yeah.
Right. Then that's what it is. And you have to start realizing, doesn't matter how much you have. There are certain things that are better put off for the next year. It's okay. You can budget for that. Right. And then that means you're making good, prudent financial choices.
Yep.
That does not mean you're poor. No. That does not mean necessarily you're actually making a wise choice. And that teaches both people some discipline.
Absolutely.
And if both people are on the same page, you're going to go much farther, right?
Yep. Yeah, absolutely. That was a conversation I had with my wife, and I said, I don't want to do tech forever. Right. Guys have shorter lifespans. You're away from the family all the time. traveling, and I said, so there's a goal to be retired.
Right.
And I said, in order to do that, we have to decide what kind of lifestyle we want, because that's going to dictate how many properties we have.
Right.
And our strategy for those properties and how we acquire them and how we manage them.
Got it. So jumping back into New Hampshire, right?
Yeah.
You're in a state where population is very little.
Yes.
Right?
1.4 million-ish.
1.6 million in the whole state.
Yes.
Right. So that's like a section of Chicago,
It
right?
is,
I mean,
yeah.
it's just, it is, but yet it has some unique advantages and some unique disadvantages.
Yes.
So let's start with the unique, I guess, disadvantages in where you are, right? How about property taxes?
Very high. Very high.
How about a lot of foreclosures?
Not very many. Foreclosures are always pretty thin because banks in New Hampshire are pretty conservative.
Yeah.
Because a lot of those banks are very old banks. Like some of the oldest banks in the country are from there.
Yeah.
And so not a lot of foreclosures. So when people, like Stockton, California was down 70%, or, Vegas was down 70%, and you could find there were 100 new listings every Monday that were foreclosures. It just doesn't happen in New Hampshire.
Right. It's the state motto is live free or die.
Yes, sir.
Right. I mean, and literally that's kind of the way the state is.
It
It's
is.
the founding till today. It's it's a different, like Texas has a different tinge to it.
Yep.
Right. Illinois has a different, that's just New Hampshire. Right.
It is.
And when people choose to live there, it's kind of a more on the minimalist side and more of a freer life, nature, this, that. It's a different type of a lifestyle, right? And that is reflected in the life's choices in real estate. That's reflected everywhere else, right? As a part of the culture, as a part of kind of how you do business. So, did you, after you started doing house hacks,
Yeah.
right? Did you start getting into multis at that time? What was that kind of? When did that happen?
So the house hacks for us, it was, so what I believe in, kind of what we teach is, duplexes, triplexes, and quads. There's a lot of that was built in the Great Recession, way back, or Great Depression, excuse me, way back in the 30s. And so because of the Great Depression, a lot of that housing, kind of co-living, a lot of that stuff was built then. And so they were very minimalistic. It was, how big were the bedrooms? They were 10 by 10. You can't find a bedroom that's 10 by 10 on a new set of construction plans.
Sure.
So what really largely happened from a New Hampshire perspective is there's really wealthy areas that are kind of by the coast or closer to the coast. And then you can go, so the big claim to fame in New Hampshire is you can be on the ocean within an hour, you can be in Boston within an hour, and you can be in the White Mountains within an hour. So you really have that flexibility of what you want from a lifestyle perspective. So, when we started doing the house hacks and then getting into, we were always doing duplexes, tris, and quads because that was available. But the idea was I was very liquid. When an economy crashes, when an economy corrects, the large multifamily stuff does not sell. Correct. And it sells at a massively depreciated rate or declined rate. And so for me, I wanted a bigger audience. So I knew if I duplexes, tris, and quads, that's a residential asset.
Sure.
I know that I can get in and out of that residential asset very quickly.
Right.
Our market is pretty thinly traded where I buy. There might be 30 or 40 duplexes on the market at any one given time. And so when you get that product and you rehab it like you teach, like I teach, when we rehab it to that level, now you've got much higher rents. You've got an asset that is baked for the next 20 years at least. And you can really see some great return on that. So for me, that was where we really hacked in those smaller unit places. And then finally, I kind of made a deal with my wife and I said, hey, when we start having kids, like we'll get into a house. And that's when we decided to do it. And we could have lived where we were.
Sure.
But that's what she wanted, and I'm good with that.
Got it. All right. So you start buying it, and at that time, were you buying fix and flips, or were you buying pretty much?
Well, we were buying
turnkeys?
fix. Yeah, so we don't buy anything turnkey.
Okay.
I'm allergic to turnkey.
Okay.
Can't do them. Can't do them because I will always create more value in a deal not buying something turnkey.
Got it.
So for
you're basically getting in, forcing up equity by getting it rehabbed, getting it turned around properly, putting tenants in there, good tenant selection, and then obviously on the back end, the value goes through the roof.
Absolutely.
Got it.
Yep.
And then what is like the price points? Right? Obviously, the price points have skyrocketed in the last few years, but you were in the market 2008, 9, 10, 11
Sure.
at that time,
Yep.
right? And clearly, New Hampshire didn't pull back like the rest of the country, but you guys had pullbacks, obviously.
We did have, we
right?
had pullbacks of, 15, 20%.
That's it.
Yeah, 15, 20% was kind of the top.
Wow.
There were, you look at, like I said, Vegas, was 70%, and even nationally, the national number was 28.7, went down 5 years in a row, 28.7%. We were, for the most part, 15, 20, depending on the town.
Wow.
Yeah.
No, it's interesting because
More resilient.
Again, I mean, very conservative population. I mean, that's just what the state is. So there were not as many crazy loans, right? I mean, if you look at some of the states, which most people forget, you look at New Hampshire, you look at Maine, you look at West Virginia, look at a lot of the places. Actually, even though, quote unquote, the average person, we're not talking about the wealthy people.
Sure.
The average person, the income is not that high at all, right? Nope. But yet they had less foreclosures.
Yes.
Is because even if they're broke, they've always been broke. Right, and they're not living in $1 million house. The difference was that a person who was a fry cook in California was living in $1 million house because you could just put whatever you state is the stated income loan, right?
Yep.
I mean, it didn't matter what you were, and that's the lifestyle expansion was crazy, which didn't happen in your area.
Much smaller, yeah.
Much smaller.
Much smaller, more targeted towards cities, honestly.
Sure.
And so that's what we saw a lot of that of. But, price point in 08 and 09 on a duplex, was 150 to 250,000.
Sure.
Price point on a duplex now is, 600 to 750.
Yeah.
Pretty, and so thankfully we bought a lot of duplexes.
At the time.
Yeah, at the time.
Got it.
Well, actually, at that time, we were still doing the house hack because we were still younger in the journey. The big boom for us was we tripled in size with COVID. Everybody went running for the hills with COVID.
Okay.
They all went running for the hills, and they said, I'm not buying. We have no idea if people are going to pay their rent.
Sure.
And there was fear.
Right.
And so when we saw rates go from 6.5 to 3.5, and the price of the asset not change, I'm a buyer.
Got it.
And we bought a lot. We tripled the size of the business in 18 months.
So today, right? Is it by we? Is it you and your
My wife.
Right? You don't do any raising of capital and the GPLP, that whole thing.
None.
Why not?
So we've been asked a lot to do that stuff, to do syndications and things. I am so ultra conservative. I just don't want other people's money. I like owning the assets that we have. So all the assets that we have, the only person that we partner with is a bank, and they have a mortgage. We'll have mortgages on properties. But for us, we've just, my wife and I are very comfortable with owning the decision at the end of the day. And if we want to be far more risky in our decision-making process, then we're not putting anybody else at risk. So for me, I think there's great syndicators out there. It's just for me, when we buy the asset, and we buy it because it's something that we know what to do with, and that's what's made us most comfortable in the past.
So, I heard somebody one time say, and I really like this statement about the syndicators, because I've always wondered, am I making a mistake by not syndicating anything, right? And somebody said, listen, Andrew, you're in the real estate and the cash flow business.
Yeah.
When you're an operator, you own the business, you're whole and soul, right? You may have a loan, but you don't have any outside money that you've raised, right? He's like, you're in the real estate and the cash flow business. The syndicators are in the money management business.
I agree with that.
Right? And I thought about it for a minute. I'm like, oh my God, that's so true.
It is.
Right? It's not, it's truly two different businesses. It's not like right or wrong.
No, it's just
a different business.
That's right.
Right? Like
That's
somebody
right.
saying, hey, you're a stockbroker. Okay, you're a stockbroker. I mean, and that's the first time that actually started making sense. That I think a lot of times I see that today. People get into real estate and then they'll start doing syndications, and they claim to say, well, I own XYZ property, right? It's like, no, not quite. Like, it's like, well, I own 100 shares of GM. What, do I own GM?
No, yeah,
right?
exactly.
I mean, I may own 10 toilet seats at GM somewhere, right? I mean,
Exactly.
that's really what it's, and there's nothing, it's not a knock on it.
No,
right?
not at
It's
all.
just that you're a money manager, you're raising capital,
Yep.
you're getting a piece of it on the raise side, then you're hopefully managing it. I mean, that too, they give the management away, which I never understand, which I would think you'd want to manage it really tight.
I would
right? And so that you can take a little bit of cream off the top, which is fine.
Of course.
And then on the disposition, you're going to get a little bit piece of the action on that side also.
Correct.
But that's a money management business.
It is.
Not to be confused with owning real estate.
Agreed. And I think, for me, I like getting into the game. I like managing the asset. It does become like adult monopoly.
Sure.
Right? Where you say, hey, I'd really like to buy Park Place and Boardwalk, but I'm going to have to sell out of Vermont Avenue. And those are the types of, things that you can do from a portfolio perspective when you get to size.
Right.
And so, we didn't sell anything for a very long time. We grew a lot of equity. And obviously rents go up dramatically. It also allows us to do and participate in programs that we care about. Disabled vets housing, single mom housing, workforce housing, things like that where we can make a difference for that person. And it makes a huge difference to them because they could never afford a market rent unit.
Got it. So let me ask you this. You have a basic philosophy.
Yeah.
Right? Which is the Lumberjack Landlord, right? Where does that come from? Is it like a good old boy thing, or what is it? Clearly, there's a philosophy, there's a thought process that you have. What is that?
Great question. So the Lumberjack Landlord thing, I work in tech. I was from New Hampshire. I worked in Mass. And so one day I show up in a shirt much like this, except it was flannel.
Sure.
But a patterned shirt, and they say, what are you, a lumberjack or something? And I was like, yeah, you want to talk about it outside?
Yeah.
And so it was like, what's the problem? I go, nothing. You called me a lumberjack because I'm wearing plaid.
Yeah.
And so that name just stuck. And then when I was looking to develop, somebody was just on me all the time, just saying, hey, listen, I could drink a coffee every minute of the day while somebody was asking me questions about real estate, and it still wasn't worth my time.
Right.
So if you want to give your time, that's fine. So it was a way to impact as many people as I possibly could, but not have to drink the coffee and not have to kind of go through that process of everybody needs that same core information. I'm far better in a one-to-many, one person to many people than I am in a one-to-one. There's certain things you can handle one-to-one when they have the individual problem, but most stuff is horseshoes and hand grenades. It fits in buckets.
Sure.
And so it's being able to walk people through. So the philosophy behind a Lumberjack Landlord was really twofold. One was that was the nickname that I was given. And then adding the landlord piece to it was very often it is guys that dress like Grant Cardone.
Sure.
Guys that are in boardrooms. Sure. That's what the big investor looks like.
Sure.
And I think that many people try to be something that they're not. I'm just a normal guy. I'm a 9th grade dropout. I learned how to do real estate. And I got pretty good at it, and now it affords me a pretty fantastic life.
So this is important, right? Because what you just said, which is what the perception is of a quote unquote landlord,
Sure,
and an actual landlord, right? So just give people some stats. Everybody thinks that, oh my God, all these big companies own all these properties, single families, right? Yes, there's few 100,000 properties they own. It's true. But when you look at the total rental market in the country, even today, right? When you look at the regular single family, 2-unit, 3-unit, 4 units, up to 6, 7, 8 units, right? Only 3% of that inventory is owned by big hedge funds.
That's right.
Number one.
That's
right.
right.
Number two, the everyday landlord is a lumberjack landlord.
Yes.
Meaning it's your everyday mom and pops, right? Where they bought a property, a townhouse, decided not to sell. They're like, okay, we have a little bit of equity.
Yep.
We're just going to rent it out and we're going to buy another house.
Sure.
It's a forced retirement plan.
Yes.
Is who your everyday landlord is.
Absolutely.
Right? I mean, everyday landlord is not even you at this point.
No,
right?
not anymore.
I mean, because obviously you have more units than the average person, but the average person, average landlord is not somebody who is rich or wealthy.
No.
There's somebody who has a nice little nest egg.
That's right.
In 2 or 3 houses.
That's right.
And they've realized that over time, it is bulletproof. You get a lot of leverage. You get a lot of tax advantages. But that's your everyday landlord, right?
Yeah.
I mean, and which is, it's that personification of that, Lumberjack Landlord is so, appropriate for that reason.
I think so. I appreciate that. I think that, one of the things that I looked at was, I sat down at the closing table on my first deal. There was a real investment. I sat down at the table and I'm filling everything out and I finish and I was like, I don't have the tenant's information and there's something called an estoppel. You know what those are. Most people don't. But there was none of the tenant information. I didn't have all the keys that I needed. And I literally sat there and I said to myself, oh shit, I'm a landlord. Now what? And it was, everybody's focus was on the buy. And there's very little focus on how the buy is this big of a window. The buy is this big. It's, 60 days, it's 90 days. That's how big the buy is. I'm going to own that asset for 20 years. This is how big the own is. So I had to find a way to say, how do I help people transition from the buy? Because there's a million courses out there for a buy. This guy's is actually one of the best. But there's a million courses out there on the buy. How many courses out there on the daily management of tenants, toilets, and termites? What does the daily management of that look like? That's where I put all my focus, was really teaching people, here's how you manage the day-to-day. The problem is that you've got 44% of the market that uses property managers. How many property managers, how many people that have a property manager would raise their hand and go, my property manager is awesome if you don't own them? They're usually horrible. And so that was what I brought to market was, if you're part of the 56% that wants to manage it on your own, manage it from your phone, this is how you do it. If you're part of the 44% that turns over the keys essentially to somebody else to manage it, here's how you need to manage them and make sure that you optimize. Because what's very often true is that it's not about door count. You know this. It's not 100%. About door count at all.
100%.
What it's really about is margin count. Yeah. How much am I making on the asset?
You got to repeat this, man. This is important.
Yeah.
Right? It's not about the
door count.
Right. So real estate is not about the door count.
It's not.
You used a word which is margin count.
Yes, sir.
So explain, what does that mean?
So margin count is, as you would have in any business, it's the cost of what something costs to operate, run, and own versus what your profit is.
Right.
And so you want to run profit. That's the cash flow game, right? People that buy properties and say, don't worry, in 5 years it's going to be worth twice as much. They will be out of business in all likelihood.
It's interesting you say that because, this is something like nowadays, it's with social media, it's like everybody's a billionaire. Everybody's a billionaire. Yeah, man, I'm the, anything I try, I'm trying to put one foot in front of another. That I can't manage some days, right? And it's interesting because the thing I was hearing a few years ago was 6 figures.
Yeah.
Then it went to 7 figures.
Yeah.
Then it went to 8 figures.
Yeah.
Right? 99%, and I mean this sincerely, 99% of people talk about 8 or 9 figures. They don't even know how many zeros there are in a million, let alone in 10 million, right? It's morons, and the other morons are listening to them. And it's because people are like, Andrew, what about scale? I'm like, dude, listen, right? Is it better? Are you better off running $1 million business and running it 40% margin?
Yes.
Right? Or a $10 million business where you have barely 2 or 3% margins.
Correct.
And market turns and you're out of business.
That's right.
Right? And I'm like 99.9% people who scale. Right? There was a book that came out, a great book, the stupidest thing ever, Traction.
Okay.
Right? It's the craziest. And it has this whole thing. Everybody, you run a $1 million, $2 million business, gross, mind you.
Yeah.
This is not net, gross.
Sure.
Right? And you have a CEO, CFO, CMO.
Oh, dear God.
Oh my God.
Yeah.
Right? And what do you take home? $100,000.
Yeah.
Right?
Yeah.
You're much better off running a smaller, leaner, tight business.
Yes.
Where you take 2, 3, 4, 5, $600,000 home.
That's right.
Right? And it's no different with the rentals.
No.
Right? Having 30, 40, 50 shitty rental properties in shitty areas is not good.
No.
That's asking for problems.
It is.
Right? 5, 8, 10 good paid down properties, a lot of equity that will make you way more money.
Far more.
Right? Why do you think that is never discussed? Especially nowadays.
It's just not flashy. It's not flashy. I drove a Corolla hybrid today. Mm-hmm. Could I have picked the option for the Porsche?
Sure.
Of course I could have.
Sure.
But I was like, I only need to get point A to point B. It's fine. And so I think very often people want to do the big splashy stuff. I just don't. I'm not splashy. You know.
We use this all the time. I'm like, guys, listen. Money is in boring houses.
Yes.
Right.
Yes.
Money is not in fancy houses. If you drive by one of my houses, it should not stand out as ugly, and it should not stand out as too pretty.
That's right.
It should be lost exactly like every other nice B suburb house.
Yep.
Right?
Totally
because
agree.
boring people do not move. Boring people are good tenants. Boring partners don't cheat you.
Yeah.
Right? People who are very boring, who are very blah, right? They are the people who do non-exciting things.
Yes.
Right? Boring spouses, in some ways, are the best spouses because they don't go on adventures. No, I mean, meaning there is stability in boredom.
Yes.
Right? And especially with real estate, like when we were discussing this, right? For me, the average turnover time is somewhere around 6.2 years.
That's unbelievable.
Right? For a tenant, and I used to tell them all the time, the first 28 properties I still remember, I never did a credit check. I'm not saying you should do it.
Yeah.
Right?
I was the same.
Right? And I would look at the tenant, talk to them. If they're nice, kind, their car was clean, then I would make them go drive back to the office to fill out an application. If they ever said, oh my God, why do I have to drive to the office, blah, blah,
you're
disqualified.
Done.
Right?
Yep.
Because if you're this big an ass, when you're trying to get something from me, what are you going to do on the back end? And literally, I used to tell them, I'm like, guys, listen, you're moving in today. As much as humanly possible, I'm not going to raise the rent on you. I'm not saying never, but I'm not going to try to, nickel and dime you to death.
That's right.
I'm going to respect you. You're going to respect me back. And the way I want you to be carried out of here is on a gurney, right? And they would look at me like, what are you talking about? I'm like, yeah, you heard me correctly, dead. They're like, what? I'm like, well, I want you to live here
Stay forever.
till the day you decide not to live anymore,
That's
right?
That's
and they would laugh. And I was like, dead serious. I'm like, guys, I mean, I'm very grateful that you're taking my property, and you better be grateful that I have a nice property to give you. It goes both ways.
Absolutely.
Right? And a lot of those tenants, right, maybe I had a rapport with them, maybe I had a relationship with them, whatever it was, never once gave me trouble.
Yeah.
Right?
Agreed.
Because you're picking people, and anybody who's like, oh, you're kind of weird, I'm like, yeah, I am. Maybe you and I are not going to get along, period. Yeah. So don't even rent from me. How important is the stability of tenants?
Oh, my goodness. It's, in my course, one of the 11 most important things is actually tenant selection and how you manage it. It's the way that we advertise brings us a certain type of applicant.
I never thought about that, actually.
Advertise.
Wow.
So the way that, and that's my background is sales and advertising in the tech world. So the way that we advertise brings us a different type of tenant. It weeds out the noise. And we don't actually charge application fees.
Oh, wow. Okay.
We don't charge application fees. We think that we believe that there's a place for an application fee. However, we know that there are a lot of landlords out there that churn.
Okay.
And what that means by churning is they'll set a price and they'll say, hey, none of these requirements, and then you have 150 people apply, and then they never hear back because they're just up to the $50 fee.
Sure.
So we actually like seeing as many applicants as possible. We list what our top 3 requirements are, and ours are not the same as everyone else's.
Okay.
And that brings us a unique tenant that is far more qualified. So not only do I get 3 to 5x the flow, and this is what we teach, we get 3 to 5x the flow of applicants, but the applicants that we have are far more qualified than our competition's applicants.
Got it.
We get the best of the best applicants. And there's a way to do that, but it's all how we target our marketing, how we write our marketing that generates those leads for us.
Got it. Okay. And is there a some tenants? I mean, some landlords, right, will try to push the max.
Yep.
Right. I personally don't believe that. I think I will take a better qualified, a longer term tenant over somebody who's going to pay me $100 more.
Absolutely.
Right. So somebody says, "Hey, Andrew, I have a perfect credit score, and I'll sign a year lease, and I'll pay you, let's just say $2,500." I'll take somebody who'll sign a 3-year lease, has long, stable jobs, and says, I have kids in college.
Yes.
School.
Yes.
They're not going to be done for another 5 years.
Yes,
right?
absolutely.
The factor that they have a reason to stay in my property for the next 5 years, I like that much better than somebody who's perfect. And I know next year they're going to buy a house.
I agree.
Because turnover.
Yeah,
So,
I agree. It's really funny. If you ever interviewed my staff, they would say, what's one of the things that Matt says the most often? One of the things I say the most often is I hate 800 credit scores as much as I hate 500 credit scores.
100%. 100%.
Right?
Explain that.
So for us, that 800 credit score person, they have the credit, they have the credentials. Yeah. It's just a matter of maybe they're a little bit of money away. Yeah. But the other thing that they have too is that I find that they are far bigger complainers. Yeah. Because they want it the way they want it, and I've got an 800 credit score, and I'm one of your best tenants. Sure. You're not, and I don't care. You're no more special than any other tenant. You're just not more special because your credit score is higher. Sure. You aren't. So we're a lot alike, where we are looking for that person that has what I call working man's credit. Right. 600 to 700, right. Working man's credit. They've got jobs, they've got responsibilities, and they just need a fairly priced unit to have their family. Right. That's it. And those people stay a long time.
No, we were talking about like Section 8 or Housing Choice Voucher Program, as it's called. Yes. Right? A lot of times people have either a very bad or a very good connotation of it. Mm-hmm. And again, it's actually neither. Neither is it very good. I totally agree with you. Neither is it very bad. Yep. If all you do is put all your eggs in a Section 8 basket, I feel sorry for you.
I agree.
And if all you do is avoid Section 8, I feel sorry for you.
That's right.
Right? There's a happy medium, because a lot of times you'll find good quality Section 8 tenants. Right? I agree. It's like anything else. I agree. There are some of them that are very conscious. They care about it. They don't want to lose the voucher. They don't abuse the system.
That's right.
And you actually feel good about working with them.
Yes.
Right? Because that's what it's meant for.
It is meant for them.
That is what it's meant for. Like sometimes people are like, Andrew, you're capitalist, you're heartless. No. I hate assholes. Yeah. Right? I hate people who abuse the system.
Absolutely.
Right? If you have somebody, you have a veteran that clearly served the country for my ass to sit here, right? Clearly, I mean, any kind of a person with a brain is like, hey, who should the assistance go to?
Absolutely.
Right? Even if it's a single mother, whatever. If the person is conscientious about what they're doing, they're a respectful tenant, right? I love those people.
Yes.
Even if they pay $100 more, less, it's okay.
That's
Why?
Right.
Because they take care of my asset.
Absolutely.
Right?
Absolutely.
And a lot of times people will be kind of in one camp or the other, and it's actually the tenant quality. And you see all shapes and sizes of people.
Absolutely.
Whether it's Section 8, whether it's market tenants, it really boils down to good tenant selection.
It really does. I think that that's what's underrated in this market. Yeah. I think a lot of people make mistakes. They just go, look at the number that I got. Yeah. Look at the person that you selected. Yes. They are going to be gone in 6 to 12 months. And then you probably have seen it in your market too. We've seen it in ours, where it's a $2,500 unit. They'll give you the first month, a $99 move-in special, and then you get 2 months for free on a 14-month lease. Sure. That tenant is not sticking around long term.
No.
And that's the issue. They have a 62% renewal rate, a 60%, a 50% renewal rate. Ours is in the 90s. Yeah. And the only reason that we're only in the 90s is because we recognize that there's life changes. We still count it a vacancy when we move somebody from one of our units to another. We love having the 1s, 2s, 3s, 4s, 5 bedrooms. Yeah. Because we can move our tenants through different units. When they're a good tenant, we have some tenants that have moved with us over a 10, 12-year period. They've moved 3 times.
3 times from one unit to another to another, sure.
Yeah, they've moved from, I was in a studio, and now I've got a girlfriend, and I want to move to a 1-bedroom, and now we're starting a family, so I really want at least a 3-bedroom because this is how I think our life is going to go. And we've seen that maturation through the process. We love that. We love that because, and do we get full market from them? No, why do I need to? Yeah.
No, because I mean that's the part of it. A lot of times people don't understand.
Agreed.
Right? Is the turnover? I mean, think about it. Right? You have somebody you're charging $100 more.
Yes.
You're pushing the market.
Yes.
The chances of them moving out are a lot higher.
Absolutely.
Right? I will take a tenant which is $100 lower, even $150 lower, that stays with me 5, 6, 7 years.
Absolutely.
Versus somebody that I have to do a changeover every 2 years.
Yep.
Right? Mm-hmm. Do you guys do year leases or 2-year leases or 3-year leases? Do you guys do any of that?
Yes.
Okay.
Yeah, we do all of it. So 1s, 2s, or 3s. Okay. We have some that are 5s, believe it or not.
Up front?
Yeah.
Oh, wow.
Yeah, 5s up front. And then if, when we see their life, the other thing that we'll do too is we'll bake in and we'll say, hey, just a 2.5% increase. So that we're not stuck at that rate.
Got it.
Or a 5% increase, or we'll do CPI. But we've got a number of different things. And we just explain to them what that is. But some people, we have one tenant that we got, they lived 12 years somewhere else. They said, I'm in my 50s. I don't want to move again. I said, great. So then let's do a 5-year lease and then we can go from there. It takes the same amount of effort for me to evict a 5-year tenant as it does a 2-year tenant or a 1-year tenant or a 6-month tenant. It takes just as much effort. Right. So I might as well bake into the cake the rent increases, because that's what rent control is. Right. That's what most states don't understand is when you do rent control, all you're doing is guaranteeing I'm going to raise the rent every year. Right. There's a lot of places like we don't raise the rent every year. Right. We just don't. Right. So a lot of times when we do a 2-year lease or a 3-year lease, we don't even put a rent increase in there. Right. I mean, it's a similar sort of thing we do, right? Yeah.
Because to me, initially advertising-wise, right, we always advertise a 2-year lease. Yeah. Right? And that's what we prefer. And people are like, well, do you get tenants? I'm like, yeah. He's like, well, but a lot of tenants don't look at it. I'm like, people who want to move, they don't look at the unit, right? Mm-hmm. I don't want people who want to That's right. And I'm like, who are the people that are going to create the most nonsense?
Oh, yeah.
The people
the shorter terms.
who are basically idiots, right? Yeah. I mean, who is afraid of a commitment? People who basically are non-committal. They're non-committal to everything, right? Mm-hmm. People who are stable, people who are long-term, people. And if people have been right on the mark, good as day, right? 2 years, they renew again. And, and life circumstance happens. Sure. If somebody gets sick. I mean, we understand. Like, we all understand. It could be me. Mm-hmm. Right? And we're going to work with them. We're not going to go stick it to them just because. Right? That makes no sense.
Absolutely.
Right? It's like, hey, it's okay. It's like, you can't just break the lease like that. But if you work with us, we'll be more than happy. Right? And so a lot of times I think people, and this is, as much as I like bigger pockets, I can't stand it. Because the people who have the most time are the biggest idiots.
In many cases,
and they have the biggest voices ever, right? And they'll argue. I'm like, man, I don't want to argue, right? You don't want to sign a single lease. You just want to because, people are going to knock, onto the lease anyway. So why would I? I'm like, okay, if that's who you want to attract to you. But a lot of it is tenant selection and then proper management.
Absolutely. And that's the thing is, a lot of people spend a lot of time learning the buy. Yeah. This is how I buy, and these are the numbers, and this is 100%. Where I want to be. And that's what they spend all their time on. The problem is that I'm there that day one where I go, hey, congratulations, you just closed. You better be in the people business now, because now you're managing tenants, toilets, termites. You're managing code enforcement. You're managing contractors. Right. What do I do in a case of emergency when the roof starts leaking or when the electric panel starts sparking? Or what do I do to manage my business moving forward? Because just as hard as you worked to get it, it can disappear like that. Right. So our focus really remains. There's a lot of great ways to buy. I've bought every way you possibly could, off-market tax sales, auctions, you name it, whatever. But the biggest issue for me was how did I then manage the tenants, manage the projects, manage the repairs that needed to be done, and have the money to do those things. Sure. And I think that that's where the ball is dropped by a lot of landlords. And they're like, yeah, I'm just getting out of it. You're giving up. And why? And you're giving up for the wrong reasons. You just don't know how to properly manage the asset. And if you could learn how to properly manage the thing, it would change your perspective in 24 hours. Right. It would change your perspective. So that's really my passion, is just teaching people how to manage the assets they're acquiring. Because like we talked about earlier with margin, I can have 3 times the margin that my competition has, which means I can owe a third as much and make just as much money. And that's the key. The key is building assets with margin that don't have a lot of heavy turnover, that you take care of, that you can afford to do the maintenance on. You're not doing your tenant any favors, not raising the rent over time. Yeah. You have repairs that need to be made.
No, it makes 100% sense. You're 110% right that even for us, right, we focus so much on buy, sure. Right? How to buy low, how to get it fixed, and all in cost and all this stuff. You can and I've done this, right? I'm guilty 100% where I bought it at such a good price, right? I fixed it up so well. I'm like, man, I'm the best at it. Yeah. And then completely screwed up the management. Sure. And given back all the profits, if not more, on the management side of it.
Yes.
Right?
Yes.
And it's not because it's not because I'm dumb. It's just like what happens is you're so excited about, oh my God, I got it finally. And then you screw it up all in the management. In fact, you can actually buy something a little higher, but if you're a better manager,
that's right.
Because what's the buy part? Like you said, 60, 90, 80, 120 day period.
Yep.
But yet the management side is the rest of your lifetime.
It is.
Right?
As long as you own the asset.
And if you train your tenants poorly from day one,
yes,
they're going to be a nightmare. And you're the one that's the trainer. They just don't know it.
Absolutely.
Right? But if you set up the standards to begin with,
absolutely,
you're going to eliminate 90% of the problems.
Yeah, I mean, that's how, we've gotten to the size that we've gotten to. I have one employee.
Right.
That's it. It's just myself and my wife, and we manage it, and we can do it from our phones.
Right.
And when you set up, all the technology is there now to be able to do this. It's just a matter of processes and steps that you take to manage that size of a portfolio and still be able to grow it.
Got it.
All those things that you talk about are of critical importance if you're going to grow.
Right.
The idea is if you can keep that much more of your money, you can grow that much faster if you're just better managing the asset.
100%.
Yeah.
100%. So how do people reach you?
So Lumberjack Landlord on YouTube is where you can find me. I actually recorded a 20-minute video just taking people through the syllabus. Okay. If that's the stuff, if any of that stuff is what you struggle with, if your property manager struggles with any of that stuff, you can now bring them these ideas and say, this is how I want you to manage my units. That's what we find far too often. Why should the property manager make more money on an asset that you're at risk for that you own? Why should they make more? They shouldn't.
It's what's interesting is this, right? And this is the reality of the world. Most property managers do not own any properties.
It's amazing, right?
Most property managers do not own any properties, number one. Number two, a lot of good property managers start a property management firm because they had so many problems with their own property manager.
That's
I know
right.
so many of them.
A ton.
And then they realize how profitable it can be, right? And they may run a good business, but then because it's a high touch point type of a business,
it is, yeah.
Right? They have to make money. I mean, like,
of course.
It's not charity they're running. But then what happens is, let's say they're managing 300 units and they have 60, 70 units. Their units get managed for free.
Yes.
Because that resource is already there.
That's right. That's absolutely right.
And a lot of times people don't really, and that doesn't mean that you don't have good property managers. It's like anything else, right? You have good people, you have not so good people. But I always feel that your first 15 or 20 properties you need to manage.
1,000%.
Right?
I totally agree with you.
And then you can actually give it to a property manager.
Yes.
Because otherwise, I mean, it'll be like the devil dancing on your chest.
Absolutely.
Right? Because they have you by you know what.
Yeah.
Right? And you can have the best properties in the world and lose your butt.
I would guarantee you, if you gave 20 of your properties to a property manager, vacancy would be higher, turnover would be higher, repair bills would be higher, all of these things would be higher. And that's why, again, a lot of times guys that get to size, what I've done is I've stolen all the things that large property managers do, and I've boiled it down to where mom and pop property manager can manage their entire portfolio just from their phone.
So I have a question on that.
Yeah.
Because, I mean, same exact thing. Like for us, there's almost 350 properties. It's managed by one person.
Yes.
Now, that person does not manage any Airbnbs or midterms, mind you.
Of
right?
course.
We're talking about
long-term rentals. Yep.
Long-term rentals. And she's busy. She's exceptionally good, right? So I'm not saying that it's easy by any means, because you're going to have 3% of the retards that are just pain in the ass tenants, right? Doesn't matter how good you do it. The other part is a lot of times people think the secret is necessarily technology. Right? They're going to be, I want this software, this and this and this, and it generates letters. And and a lot of times, to me, it's just like there's a personality that loves to fiddle with shit.
Yes.
Right? I mean, we still manage all the properties on Excel. Right? We don't do anything else because I like to look at it, okay, collection for January, which one is red?
Yep.
Right? Is there anything short? Anything? I can see it on one sheet.
Yeah.
It doesn't matter if it's 300 or 400 because there are going to be 4 or 5 that are going to be red.
Sure.
Right? 99%. I should not see any color on it. It should be all good.
Oh yeah.
Right.
All black.
It should be all in the black and something maybe in orange. Okay, it's eviction going on or whatever. What do you guys use as far as software-wise?
So we were the same way. We were a spreadsheet.
Sure.
But because I'm a tech guy,
Sure.
so I went and I evaluated 6 products.
Okay.
Evaluated them over a 6-month period of time. I put properties in each one of them.
Sure.
And the final winner for us was a product called Door Loop.
Door Loop. Okay.
Door Loop. We have all of our units in Door Loop. It only costs us a few $100s a month. But the ability that gives us for communication with the tenants is our game changer.
Got it.
It's not so much the GL, the general ledger, or income or loss statements or payment of rent. But one of the cool things about it is we actually are able to collect rent from our tenants through the platform for only $2.
Oh, okay. Oh, wow. Okay.
For me,
So is that an
was,
ACH setup, Zelle setup? What is it?
ACH setup and it's $2 a month, and the tenant can pay the $2.
Okay.
And so it gives us a collection side for a very little money. It gives us a tenant communication for very little money.
Sure.
Because we can send something to a unit, we can send something to a building, or we have places where we own stuff on the same street, where we have multiple buildings on the same street, where we can send it to all the buildings on the street that we own. So the means of tenant communication, very, very, very easy for us.
Got it.
The other thing it allows us to do is centralized management. So I have everything come into a number where they can leave a message. It gets transcribed, and then that message can then be picked up by one of our supporting contractors. We can also take it and see it, and if it's an emergency, we can actually take it and forward it.
Okay.
So, but we have 3 people that monitor that inbox all the time just because, and it just goes off on a ding on our phone like a text message. But being able to set that up and manage that makes it very easy for us to go on vacation and do stuff. We can take ourselves off the list and we let the guys know, hey, we're off the list for the next, like I'm off the list right now. I'm not seeing any of the emergency stuff.
Got it.
It's being taken care of. And so it's a combination of really what it comes down to is process and the people managing that process, and then the systems that you're using, like Excel, the systems that you're using to accomplish the goal.
Got it.
People, process, and systems, and that's going to get you where you need to be.
Got it. Guys, this has been an amazing podcast, right? It's something I think we share a lot of synergy in terms of the basic philosophy. And real estate is something that can be learned, right?
Yes.
I mean, we're kind of talking about that it really has nothing to do with 9th grade, 8th grade, 15th grade. A lot of real estate is common sense.
It is.
Right? It is not something that is that difficult. There are techniques, there are certain things that you have to understand. The beauty about real estate is I feel it is the greatest equalizer.
Absolutely.
Right? Meaning it doesn't matter if you're born with money. It doesn't. A deal doesn't ask you if you're born with money. It doesn't care your whatever color, if your skin, short, tall, ugly, good looking, makes no damn difference.
Right.
Right? The question is, are you willing to step in between some sort of a distress, some sort of a problem that needs to be solved?
Yes.
And a seller. And if you're that person that shows up in the middle,
Yeah.
right?
You have a deal.
You have a deal.
Yes.
I mean, it's really, and that's the art of learning that, and everything else beyond that is everything is a learned skill.
Absolutely.
Right? It is, none of it is something that you're born with, right? Or none of it is based on because you're talented, right?
Yeah.
So anything else, Matt, you want to wrap up with?
Yeah, I mean, Lumberjack Landlord, 9 p.m. Eastern time every Thursday, I do a live stream, and I do it just to answer people's questions.
Oh, nice.
So, it's the way that I like to give back. So every week I give 90 minutes, and after all the kids are in bed, my wife gets to go to bed early. And I'm just there for 90 minutes from 9 p.m. usually to 10:30 or 11, answering people's questions about real estate. And it can be just the specific problem that they're having, or it can be just general questions about we service kind of new to we have some people that are 200, 300, 400 units that are just like, hey, have you encountered this before? The reason I like doing it in that forum is that everybody then gets to learn from that experience. So, yeah, every Thursday, 9 p.m. Eastern time on the Lumberjack Landlord. But thank you so much for having me in. This is amazing. It's been a
Definitely.
blast.
This has been great. It was fortunate that you were able to make it to Chicago.
I was thrilled. Yeah, thrilled to do it. You were my first email. I was like, hey, I'm coming to Chicago.
No. This is great. Yeah. So, guys, Matt, the Lumberjack Landlord, make sure you check him out. You can reach him out. And you have a course that you have as well.
We do.
So 9 Eastern.
9 Eastern.
9 Eastern on Thursdays, Q&A. And if you want to learn about property management, he has a course, right, that you can go check it out. So having said that, this has been absolutely great. You're listening to Andrew Holmes, Cashflow for Life. And make sure you share, like, and we'll talk to you soon.